Hey guys, if you're looking for help with your Amazon business in terms of troubleshooting or strategy, visit sellersessions.com/consultancy or drop me a message to danny@sellersessions.com. Hey guys, welcome back to Seller Sessions. Today I bring in Brittany Brown. Hey Brittany, how are you doing?
Hey Danny, thanks for having me. I appreciate it.
Not a problem. Do you want to give the audience a little bit of background on yourself?
Sure. So I'm a CPA here in the United States. I own a business called Ledger Gurus. Ledger Gurus is an accounting solution for e-commerce businesses. We basically handle everything from bookkeeping and payroll and cost of goods sold all the way up through cash flow management and stuff like that. We're deeply immersed in the e-commerce world. We take only e-commerce clients, so we know the space really well. And our goal really is to help e-commerce clients become more profitable by really understanding the numbers of their business. The numbers are the best advisor, really.
Yeah, makes sense. That's where the data is where it matters. You know, we can all think we're doing okay. It's not until you look at the raw numbers that tells the truth about your business.
Right.
But as you know, that most entrepreneurs don't find the accounting side of things as sexy as, you know, building stuff. So, but ultimately this area needs to be taken care of. So we won't go into the basics because most of the sellers who listen to the show are doing anywhere between 50K and 500K a month. So it makes sense to focus more on the advanced side of things. There's other podcasts that can do more of the basics. So let's get straight into it. The difficulty with Amazon is actually getting the good data and getting it out of the system. Do you want to go into a bit into detail on that?
Sure. So Amazon is a great example of why we actually decided to focus on Amazon on e-commerce only businesses, because the accounting for a business that's selling on like a channel like Amazon is so different than normal businesses that it made a lot of sense for us to have to focus. So let me just give you a comparison to help you understand why that's the case. So in most businesses, almost all the activity is flowing through the bank account. So as long as I'm tracking the transactions of a bank account, which is a fairly simple and straightforward thing to do, and any bookkeeper could do that, I'm seeing the invoices come in, I'm seeing the bills get paid, I'm watching credit card charges, and I'm capturing all that data. I'm 98% of the way there from an accounting perspective. But what makes e-commerce businesses very challenging, and the reason why we decided to specialize, is because for e-commerce businesses, most of the activity of the business is actually going through channels, and you're only seeing deposit summary information hitting your bank account. So if you think about Amazon, Amazon has a deposit that hits every 2 weeks. And that deposit is actually like a summary of a whole bunch of activity that all went on for those 2 weeks. It includes things like your sales, your shipping, your chargeback, your FBA fees, your warehousing fees, any packaging maybe that you're paying them to do, taxes. It's a whole bunch of stuff, and all you're seeing from in your bank account is this one deposit hit. Now, it's not uncommon for our Amazon sellers to feel like Amazon is cheating me because I sold $100,000 worth of product and I only saw $70,000 deposit, and I can't explain that difference. And Amazon, they report that stuff, but it's all in this like buried back end data that's quite hard to get to. And so with Amazon accounting, there's really two problems we're dealing with. One is the transparency of the data. Like why did I only get a $70,000 deposit when I sold $100,000 worth of stuff? And the other problem that Amazon creates is a timing problem. So because Amazon deposits every 2 weeks, that has nothing to do with month end, and people are typically closing out and evaluating the financial performance of their business on like every 2 weeks, on a month end basis. And so let's take an example of where you would have a deposit come in like May 2nd, and a bookkeeper who didn't know what they were doing would probably just record that as May sales. May 2nd, May sales recorded. And in reality, that's almost entirely all April sales that just happened to close out in May. And even worse is when it's like split right in the middle. And so a deposit represents half and half. Like, how do you sort all that out? That's a really challenging problem that Amazon sellers face.
Yeah, because it throws things off on your monthly reporting. So it does look a bit scary when, like you said, a big chunk of your money doesn't come back out the black hole of the system. There's a lot of ways that Amazon can still make mistakes. And also, you're paying out big deposits, putting down on stock 3 months, 4 months ahead of lead time. And then you're seeing the smaller deposits coming back. It's not always easy to get a good reflection of what's happening at a given moment on your bank account without someone staying on top of it on a daily, weekly basis.
Right. Exactly. So the challenge that they have is getting all this data correct and sorting out what's happening. And one of the best tools we recommend for making this just easy and clear as possible is a tool called A to X.
Mm-hmm.
They're a tool out of New Zealand, and A to X stands for Amazon to Zero. And it was initially just a sync between those two, but now it goes into QuickBooks as well. And what A to X does is it takes all of the data, all of the stuff that's going on during that month, and it's creating the ability to map to your chart of accounts in your accounting software. And it's basically making it all very, very clear. And even more beautifully, it ties out exactly to the deposit that you actually saw deposit in your bank account. So you can look at their journal entry that they create, and it can say sales. Oh yeah, $100,000. There it is. I see it. And all this stuff happens, and then you see, oh yeah, there's my deposit, $70,000. I can see it all. And it makes you, like, it gives you a significantly higher level of confidence.
You feel whole again, don't you?
It explains it all. It like deciphers it all and explains it all. And it also solves the month-end closing problem, because basically how they handle it is they record all the sales that have to do with 1 month, and then they create like a accounts receivable from Amazon to explain why you haven't seen it deposit yet. And then so they fix the timing issue as well. So that's why we're a huge fan of them as a tool from an accounting perspective, because they really do a great job.
Yeah. I mean, is there any competitors out there? I think A2X are pretty much there on their own at the moment, aren't they? Or is there a, because I don't know of any other companies.
There's other companies like Webgility that are kind of trying to solve the same problem, but they're solving a whole bunch of other stuff too. And so that solution of the Amazon reconciliation gets kind of lost in the mud of that. But yeah, A2X really kind of stands on their own as far as that space that they've solved and the solution that they provide.
Cool. And what about optimizing for profit?
Yeah, so obviously businesses care a lot about being as profitable as possible. And so how does an e-commerce business really become as profitable as possible? Well, it's really about understanding your margins and how your margins are impacted by different decisions you're making. So just a couple examples of this. We have a client right now who decided that outsourcing their manufacturing to China was too expensive. And so they decided to bring their manufacturing back to the United States. But they hadn't really done like a great job of really determining what their costs were going to be on that. So now they have a warehouse where they're having to buy all these fancy sewing machines, and they're having to bring in all this staff to try to handle the manufacturing. And they just had not done a great job of understanding just how huge that task really was. And so at the end of the day, that decision to bring manufacturing in-house just about killed them as a business. And honestly, just the opposite is also true as well, that sometimes companies will decide to outsource and they don't understand that there's all sorts of transportation and shipping and tariff charges with outsourcing to another country, especially from a manufacturing perspective. So one of the first ways to really optimize your profit is to not allow costs to get hidden, especially if you're trying to make a pretty huge change, like how to handle your manufacturing, or maybe you're sourcing to a different supplier, or maybe you're sourcing to a different country. Also, another big place we see this happen is when companies decide to change the way they're handling fulfillment. So maybe they were fulfilling themselves and now they're using a 3PL, or maybe they were using a 3PL and now they want to in-house it instead. Those are the kinds of things that really require what I would call like thoughtful what-if analysis, because people do this all the time. I was just talking to a client just the other day who was like, well, we've decided to bring it all in-house. The FBA was handling their fulfillment for them, and they were like, oh, we decided to bring it all in-house, and it's going to be this cost, this cost, this cost, this cost. And they really hadn't thought it out. It was more of just well, we're sure we can do it cheaper than FBA can. And we're helping them work through those numbers right now to figure out whether or not they really can. But one of the best ways an e-commerce company can optimize their profits is to not let costs get lost, especially in the transition to a big change. Another thing is really understanding their margins by channel and their margins by SKU. So sometimes e-commerce companies make the mistake of putting in a ton of marketing spend into SKUs that actually are not their most profitable SKUs. And they don't really know that because they're not necessarily tracking margin by SKU. So getting more granular about the level of detail that you are tracking. So cost of goods sold, but not just by channel, not just across the company, but by SKU or by product line, will help you really understand where your marketing spend is best spent and how you can be more profitable as a business without having to change significantly a lot of stuff you're doing.
How are you dealing with your clients with regards to the Trump tariffs? Have you built in compensation for that?
And that's such a fun one. Also because, I mean, as you guys know, in the United States, just because Trump decides to do something one way doesn't mean that that's going to stand with the next president that comes in. And
Yeah.
so what we're telling our clients to do is they need to be aware of how their relationships with different countries is going to impact their cost to get products across the line. And it's the kind of thing where they need to be consulting with somebody who knows what's going on. So they need to get a lawyer involved or a CPA who really understands those things, because they can really do themselves in by doing business with a country that creates tariff problems that they weren't anticipating.
Yeah. So, but I mean, what is your personal opinion here of how that's affecting Amazon business along with e-commerce businesses? What kind of effect can you see that's taking place right now? Because obviously people see it would come in. There's politics and stuff involved, but I'm not fully versed in it, but I do understand it's going. Is it from like 10% to 25%? They've done it in 2 stages. Is that right?
Right. Yeah. I mean,
on some categories, so.
Yeah, it'll have a huge impact. And if you're a seller who's carrying a product where you're competing with other companies that are not dealing with that tariff because they're selling out of different countries or things like that, it's definitely going to have a huge impact. I mean, I'm a believer in e-commerce, and so by putting tariffs on things and by creating additional taxes between countries, it just impacts the overall global community as a whole in a negative way. So, I mean, I'm not a huge political person, but I'm definitely not a fan of infringing on free trade, basically.
Yeah, makes sense. Cash flow struggles. What's the key things that you constantly seeing amongst clients?
Yeah, so cash flow is a really interesting issue for e-commerce businesses, more so than other companies that aren't carrying inventory. Because if you think about your profit and loss statement, there's going to be wild variation from your profit and loss statement showing how you're doing from a net income perspective and how your cash is actually moving in and out of your business. And that can be really challenging if you don't understand what's driving that and how to plan for cash if all you're doing is looking at your profit and loss statement. So the reason why that's true is because if you think about the flow of inventory and the way it comes into the company, you purchase inventory from your supplier, and typically they expect payment, either right away or within a short period of time, maybe 30 days, 90 days if you're lucky, but usually not that long. And so you're having to pay out cash right away, right out the gate for inventory purchase. However, that is not expensed on your P&L right away. Instead, that inventory moves and sits on your balance sheet. And then it moves out of your balance sheet through cost of goods sold each month as that product is sold. And so that's how that inventory hits your profit and loss and your net income. But it's not reflective of all of the way that the cash is actually moving through your business. So one of the things we tell our e-commerce clients when we're working with them is the importance of actually forecasting cash, because of the fact that your profit and loss is a very poor indicator of the movement of cash. So one of the things we recommend is that you basically set up a structure whereby you're starting with profit and loss as your starting point with cash, and you're looking at it on a monthly basis, and you're actually looking at cash down the road at least 6 months, because people have like seasonality in the way that they buy inventory, and as they try to manage demand and big things like planning for like a Black Friday sale in the United States can completely create a total cash crisis for a company if they are not anticipating the flow of that cash flow. So by looking at your cash flow all the time, at least 6 months out, it keeps you from having a cash crisis. So you see it coming, you can plan for it, you can get funding if you need it, things like that.
Cool. And let's go into everyone's favorite subject. What kind of impact are you having with sales tax?
Right. Sales tax. Wow. Yeah. If you're selling in the United States, you need to be really hyper aware of the sales tax implications, So a couple of months ago, the Supreme Court here decided on a case. It was South Dakota versus Wayfair. And basically what was determined in that case was that instead of location being kind of the standard that created nexus for a company, now instead they're moving to really they're leaving it up to the states. They're saying each state can determine for themselves what creates nexus in their state. A lot of states are going with what we call an economic nexus, which means that they're looking at saying if you sell at least 200 transactions or you sell at least $100,000 worth of product in any 12-month trailing period of time, then you have nexus in that state. The reason why this is so awful for e-commerce sellers, I call e-commerce like the fire that can burn your business down, because nexus will sneak up on you. Like you'll cross a threshold that will give you nexus in that state, and you don't even know that you've crossed that threshold. And so now on all of your channels, like let's talk about Amazon specifically. Now, like you have to tell Amazon, I have nexus in this state, and then Amazon turns on nexus in that state. Well, you turn on nexus in your state through your Seller Central account. But like you have to actually turn on nexus in that state. And if you didn't, because you don't know that you crossed that threshold, now suddenly if that state were to audit you and you found out, wow, I did $500,000 of sales in California last year, and now California is auditing you, like they will slap you with like $100,000 sales tax back pay fee, and you didn't even know that you crossed nexus in that state. So having a plan for state
under 100K like that could cripple someone.
Oh my gosh,
it's a cash intensive business with inventory.
Right, completely cripple them. And with sales tax, it's the kind of thing like if you know you have nexus in that state, you can collect it and then you just remit it and it doesn't become an expense to your business. But if you didn't know you crossed nexus and you didn't start collecting it, like the state doesn't care that you didn't collect it. They expect you to pay them their sales tax, whether you collected it or not. And so now that $100,000 becomes an expense to your business that's directly hitting your margins on your product that you sold. And most of the time, like e-commerce businesses are not carrying huge cash balances because they're investing in inventory, they're reinvesting in inventory. So to get hit by an unexpected sales tax audit from a state and to realize that you owe all this back sales tax and then multiply that by like 27 states, because like let's talk really quick about like the choice to go to FBA, for example. So let's say before you were handling all your own fulfillment and you only had like economic nexus, but then you decide to go onto FBA and now Amazon takes your product and they distribute it across warehouses in 27 different states. And now you have nexus in all 27 of those states, and Amazon doesn't tell you. They're not like, hey, just so you know, we're sending your product to all of these warehouses and you're going to have nexus here. Like, no, the states are now auditing those warehouses to find out which sellers have their products in those states. And suddenly you had nexus in 27 states and you didn't even know that happened. Like I said, it is the fire that will burn your business down if you're not proactively managing sales tax.
Makes total sense. Is there anything you want to add before we go?
No, other than don't let sales tax burn your business down and become friends with A to X. Those are probably the best solutions, best tips I have as a CPA of e-commerce businesses.
Cool. Great, guys. Thanks for joining us. Brittany, how can they reach you if they want to, speak to you about any consultancy or some services, etc.?
Yeah, so you can go to our website at ledgergurus.com. On our website, we also have some tools available. For example, we have an ebook on how to handle the sales tax thing and how to set up sales tax for your company and make sure that you're compliant, all the kind of the checklist of the things that you need to do. And some other solutions and some other, we talk about the A to X thing on our website and stuff like that. So probably going to our website is the best place to start with that. And then if they want to contact us, there's a button that says contact us, and that'll put them in direct contact with me.
That's great. Guys, thanks for joining us. Brittany, thanks for joining us. If this is your first time, don't forget to hit the subscribe button, and I'll see you again in a few days' time. Take care.